Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 19th, 2024, and we're diving into Nike's fiscal 2025 second quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Nike, a global leader in athletic footwear and apparel, has just released its Q2 results, and there's a lot to unpack, from revenue declines to strategic shifts under new leadership.
Revenue and profitability overview. Let's start with the top line. Nike reported revenues of $12.4 billion for the second quarter, which is an 8% decrease compared to last year. John, can you shed some light on this?
Absolutely. The decline in revenue is primarily driven by a 13% drop in Nike direct revenues and a 3% decrease in wholesale revenues. The gross margin also took a hit, decreasing by 100 basis points to 43.6%, largely due to higher discounts and changes in channel mix.
And how did this impact their profitability?
Net income fell by 26% to $1.2 billion, with diluted earnings per share at 78 cents, a 24% decrease. This reflects the challenges Nike is facing in maintaining profitability amidst declining sales.
Strategic initiatives and leadership commentary. John, what strategic initiatives is Nike focusing on under the leadership of Elliott Hill?
Elliott Hill, the president and CEO, emphasized the need to return sport to the center of Nike's operations. The company is taking immediate actions to reposition its business to drive long-term shareholder value. CFO Matthew Friend also highlighted efforts to reignite brand momentum through sport.
It sounds like they're gearing up for a significant shift. How is this being received by the market?
The market is cautiously optimistic. While the current financials show a downturn, the leadership's proactive stance on repositioning and brand momentum is seen as a positive step towards future growth.
Shareholder returns and financial position. Nike has a strong track record of returning value to shareholders. How did they perform in this quarter?
Nike returned approximately $1.6 billion to shareholders, including $557 million in dividends, which is a 7% increase from the prior year, and $1.1 billion in share repurchases. Their cash and equivalents stand at $9.8 billion, indicating a solid financial position despite the revenue challenges.
That's impressive. It seems like they're committed to maintaining shareholder confidence.
Indeed, Nike's consistent dividend increases and share buybacks reflect their commitment to rewarding shareholders, even in challenging times.
EPS forecast and market reaction. Analysts had forecasted an EPS of 64 cents for this quarter. How did Nike perform against these expectations?
Nike reported an actual EPS of 78 cents, which is 0.14 cents above the forecast. This beat on EPS is a positive surprise for the market, indicating that despite revenue challenges, Nike managed to control costs effectively.
How has the market reacted to this earnings beat?
The market has responded positively to the EPS beat, as it suggests that Nike's cost management strategies are yielding results, even as they work through revenue declines.
Key takeaways. To wrap up, Nike's Q2 performance shows a mixed bag with revenue declines but a strong EPS beat. John, what's your final take on Nike's investment prospects?
While the revenue decline is concerning, the EPS beat and strong shareholder returns are encouraging. Nike's strategic repositioning under new leadership could pave the way for future growth, making it a stock to watch closely.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Nike's performance in the comments below.